What's going on, everybody? I hope you're all doing well. Welcome to another video. In this video, I'm going to be breaking down a trade that I took today on the NQ futures chart. Here is the screenshot of the short. Initially was an initial loss, followed by a re-entry utilizing a different entry model of mine. If you guys follow me on Twitter, then you know that I tweeted this earlier on in the day, where I stated that I got stopped out initially, re-entered for a 3.5 hour gain. And I'm going to, in this video, break down how to properly trade inversion fair value gaps. And we'll also go over some of my other criteria that was utilized in this trade idea here. So we'll keep it nice and quick as usual, right? Not too much yapping. First and foremost though, let's apply just a little bit of high time frame narrative to get the idea of shorts into the old brain here. So what can we notice on the high time frame chart, right? We have just a range forming here, right? Even tighter, we can see that we're forming a range between this high and this low. And we have recently taken this previous weekly high on Thursday in the AM session, which has also reached -4 standard deviation of the weekly opening price to the low of the week. So the weekly wick is what we're measuring here. We've reached standard deviation. We've reached previous weekly high. We have taken buy side liquidity. Now we can begin to look to maybe capture a short idea to internal, right? Let's break this down a little bit further into even more intraday-esque type logic, right? So we have that high time frame there. We've taken high time frame liquidity, but we of course need to wait for some high time frame, or rather intermediate and low time frame confirmations to capture an intraday trade, right? I was not looking for a reversal like this to occur. Based on my current model, I'm strictly just taking -2, -2.5 standard deviation trades and full pulling to there. So we'll talk a little bit about that as well, right? So we can see that in the morning here, we're just kind of having a hard time breaking out. We form this low, we go and run into the previous weekly high, and then we reverse running this low, and then we run back into these highs, and it's just looking a lot like a seek and destroy type profile where price is just punishing anyone trying to break out of this range, okay? So what I took out of this was seeing these failures to expand, right? We took the range high here at the end of the AM session, and we traded above this 845 high, creating SMT with the E-mini SMP. We also formed it with the YM. So we had initial SMT there, and one very important thing to keep in mind, right, is these three components, right? We want to first look for a liquidity purge, or just liquidity in the form of external or internal range liquidity. We then want to see SMT, and then we want to see a breaker, okay? These three pieces of information are going to be imperative in determining and highlighting a high probability trade idea, okay? So we have the liquidity in the form of the 8 AM highs here, or the 845 highs. We have the SMT, and we're nearing the end of the AM session, and the lunch session is opening up. So one little playbook rule of mine is that when we have an AM expansion or an AM trend, we can likely capture and capitalize on a lunch retracement back to where? Discount of the AM range, right? So at this moment in time when we are here, we can see that this actually looks like an expansion range, right? You could of course be anticipating from a high time frame perspective a reversal from here, seeing as we have a nice potential swing point forming here with this high time frame breaker, but we're just going to capture a high probability bread and butter trade, taking it to equilibrium, right? So we want to actually wait for a new hourly candle to open, because what has the 11 o'clock candle done nearing the end of it, right? When we are at the end of this hourly candle, we can deduce that this candle has opened low and closed high. this is not a good candidate for a reversal candle because we want to have a candle that's designed to go lower. Okay, so with that information, I wanted to wait until lunch, right, to capture lunch opening high and closing low into equilibrium, right? So waiting for 12 o'clock, we can see 11:45. We have the SMT here, but as it stands, right, we don't really have a breaker block yet, okay? So we have the liquidity, we have the SMT. The breaker block that could confirm bearish confirmation is going to be below this low here, and this low here is actually a 5-minute breaker block. So we have a 5-minute breaker block potentially forming, and we have a 1-minute breaker block here. So what I was looking for specifically was this low to confirm. But I did mention that I took an IFVG entry prior to the breaker formation. Okay, here is a piece of sauce that I have been using for a long time, and I think this is the bar none best way to enter using IFVGs. Okay, once you learn this way, you will not want to do it any other way, especially if you trade breaker blocks. Okay, when you are trading IFVGs, you don't want to just take any random IFVG. Okay, I want you to look at this breaker block, right? This is the one that we marked out. Closure below here is going to be our best confirmation for a change in the state of delivery, right? Or a market structure shift, a reversal. Okay, what do we notice about this fair value gap here? Let me mark this in gray. We notice that this bullish fair value gap is actually overlapping with the breaker block. It's also overlapping with the 5-minute breaker block on the left as well. Okay, it's a very, very important piece of information there. And I'm going to type it out. When taking IFVG entries, you want them to overlap with the breaker you would enter on. Okay. By saying that we want the fair value gap to be overlapped with the breaker, what this does is this actually is the earliest sign of a change in the state of delivery. Okay? Because this is a PD array that should uphold price, but is failing to. This to me signals through previous experience and through just my analysis alone that this is the earliest sign of a breaker being able to be anticipated, right? Instead of waiting for the breaker to confirm by a closure below, I will actually wait for a closure below the fair value gap and enter in that, anticipating that the breaker block will form and sell price down. Okay? So that's how you enter using IFVGs. And if you can see from my screenshot, right, I'll pull it up again. You can see where my entry was inside of that IFVG, right on the closure of it. As soon as this candle closed, I was entering. Okay, so we have our equilibrium here. We also use standard deviations. I use standard deviations with my trades, and I can see here that -2 and -2.5 lines up wonderfully with equilibrium. Okay, so for me, my idea was closure below this IFVG. I will enter short. Stop loss will go at the high. And I will full pull to -2 standard deviations. So this allows me to have better R to R with a still relatively high probability entry. It is not the highest probability comparatively to the breaker block itself, but you get more R to R, so you can sacrifice a little bit of win rate. For me, the sacrifice in win rate is well worth the potential R to R. Considering if I entered on the breaker block, I would only be yielding 2R. So I'm almost doubling my chance, and I can say from experience and from my own findings that the extra 1.61 or nearly double the amount of R with the setup, I am not losing half of the win rate. The win rate is not going in half based on this model here, if that makes sense, right? So you're gaining more R to R and you're not losing as much win rate. So it does actually weigh in your favor long term. So we'll play price through, and you can see here that we close below the fair value gap. We retrace back into it, use it as resistance, and then you get your breaker block, and we sell off into our POI. And from there, you can see we tag EQ perfectly, and then we get a retracement for further expansion lower. I was not a part of this expansion lower, unfortunately, but this was a very high probability idea. Taking it to discount of the current range you're trading in is a surefire way to make sure that you are getting the most high probability draw on liquidity. Equilibrium is actually a very good magnet for price, and sometimes I will hold through, but right now I'm just full pulling at -2 standard deviation and calling it good. So that is today's trade breakdown, guys. I hope you guys learned something. I hope you enjoyed, and I will see you guys in the next one. Peace.